Hi, this is John Firth, and this is our LinkedIn Live event called Stop Chasing Other People's Money, Why Bootstrapping Your Venture is a Better Strategy. And the idea originally came from my guest, Todd Welling. He is an entrepreneur extraordinaire, and he funded both of his companies, which are digital commerce agencies, with his own money and out of cash flow. Now, we should say, of course, these are service companies. They are in some ways in a cutting edge industry. So it is different in others, but I think given the way money is being made these days, which is primarily in the digital world, there's a lot to learn here. So I'd like to have Todd start, and I'd love to hear also your definition, Todd, of what bootstrapping is. How do you describe it? And please give a short introduction to yourself.
Hey, John, good morning. It is bright and breezy today. I'm dialing in from New Zealand, so we're about 5 a.m. in the morning here. As John alluded to, I'm the founder of Overdose. We're a digital commerce consultancy. Originally a completely bootstrapped business, based out of New Zealand as our headquarters, but now with our America's head office in Seattle. A team of around about 500 globally. And essentially our business is in helping other merchants achieve their business outcomes. So everything across the digital commerce sphere that comes from the strategy, your design, your experience, the technology, marketing, search, and data principles that go behind that. So your first question, John, was how do I describe bootstrapping? I think the more clinical version of that is not using other people's money. The way that we have seen bootstrapping for us has actually defined more as an evolution of a culture. So we have found that working in a service industry, it allows us to run cash flows in a relatively short forward-looking mindset. So we tend to be looking forward sort of 60, 90 days in how we're working. And what bootstrapping has done is defined a different methodology of scale. So we tend to say that we invest in people rather than investing in capital. So we have heavily diversified our cap table. So we now have a cap table of around about 25 members of staff. So our entire senior leadership team. So out of 500, 25 of those are shareholders now. A lot of those people, when they joined the business, obviously as a startup business, we wanted to bring in that elite capability. So people were taking quite a dramatic step down in salary sometimes to make those migrations across. So where we had the opportunity to say, do we go and raise capital to afford the best people and the best processes, the best offices, the best product? We decided to invert that model and move towards investing in people and showing them a long-term view. Now, what we've seen is that bootstrapping then drives deeper loyalty with our staff, because they're in there for the long term and you have very much a shared vision, and we start going beyond a job into a passion, and it's bringing out that entrepreneurial energy in that entire team around us. So
yeah,
I think
actually, can I ask you a question? So it's not just the energy and the passion, it's also the commitment, the loyalty that I find in bootstrapped companies. Now you say it was part of your culture. It sounded like you were using that to define the culture, but there must have been other decisions of why you chose not to bring investors on.
Yeah, I think the two things became quite homogenous in that the culture defined the economic model and the economic model drove the culture, right? Okay. So they become very much intertwined. We have certainly had many opportunities to take capital into the business. What we have found through that journey is that the vision of those that are wanting to invest in the business versus the vision we have for the business, they've always been at odds. And there have certainly been situations such as, I have a large team of developers in the Ukraine. And when we've had particular investors coming on board, their attitudes have been not with malice, but certainly with a very capitalist view, which is, hey, you're exposed in these markets, dump it, get rid, move on. It's like, hey, do you know what? That's not us. We're a people-first industry. We've made incredible investments with these people. They are not there as a utility. They are part of our DNA. And so
Although at some
where
level, and some macabre, not very very nice level, they weren't wrong. I mean, given what's going on in Ukraine, but you've been able to overcome all those problems. I understand.
absolutely, yes. We spent a whole quarter relocating 200 families, so they're all based out at West now. Everybody's safe. It's been incredibly galvanizing for us. In fact, if anything, John, our yield and efficiency increased through that period, so it was quite counterintuitive. A lot of those people saw that there was other large institutions that were relocating their tech talent out of Ukraine, so they were fighting to keep their jobs, right? And it was literally, we want to stay employed, and we recognize that the gamut of our income is directly proportional to the efficiency of our delivery. So
Makes sense.
it's very interesting when you see that human nature. The other side I'd say to that is that where we have no investors in the business, it gives us that incredible agility, John. So it means that when a war happens, we can make those decisions on a dime and be the first to react in market. And we're not in a permission-based environment. Okay, we remain even at scale in an entrepreneurial environment where we do not need to present a business plan to a higher authority. Okay, literally, the shareholders are the board are the shareholders, they are the senior leadership team of the business. So we can continue to drive the business how we see fit, not how other people suggest that we see fit. And I think that plays into where you started the conversation, where we are in a relatively cutting edge industry. We're not NFT Web3, but we're certainly in digital transformation, and that needs a level of agility that doesn't always associate itself back to, is old money a fair phrase?
Yeah, I think you're right.
And my last part to that as well is that I think agility is often based on kind of having your backs to the wall. So where we've looked at taking investment previously, if you put 10 million bucks in my hands, and that gives me an incredibly long runway to run the business, I think it also starts to affect the quality of decision making, John, right? In that you're making decisions on other people's money, not on your dollar. And I think that psychologically flicks a switch of, do I still believe the way I'm spending this money? Because essentially I'm investing back into my business every day through my cash flow. And instead of taking dividends out for my shareholders, we're throwing that back in. And obviously, as you know, the largest shareholder in the business, I have the biggest thing to lose there, but also, that means my bias to action in my personal investments is based around personal belief.
Yeah.
So with that kind of back to the wall and only having kind of a 3-month runway ahead of you, it forces you to make very judicious and practical decisions. And it also means that you've always got your eye on those fiscal numbers and not just carving through cash.
Exactly. So I want to take a break here really quickly. I'm going to return with a question. I want to make sure that if you want to get in touch with Todd, I'll leave this up for the next couple of minutes. His telephone number is here, as well as his email address. And again, we're talking about the benefits of bootstrapping. Now, another point I'd like to ask about is, yes, you don't have to go to a bunch of investors who aren't operating the business and therefore may have limited knowledge and have a different agenda, i.e. a financial one. But don't investors also bring new thinking, ideas, and contacts that could have been useful for you?
Oh, look, absolutely yes. We have always taken an attitude towards business, which is that if you are spending all of your time looking around at your competitors and the market and the other people playing in that space, you start to become a version of what you look at. You are what you become. Where you invest that energy and your thoughts and your attention, there is a bias that flows into the business through there. Now, where we have seen that, some of the, I'm not going to say arrogance. I don't think we're an arrogant business at all. I think there is a lot of entrepreneurial spirit and a view to being different and a view to playing in negative spaces. And what we tend to find from VC level cash is either, unless you're in your Travis Kalanick level of just go crazy, here's billions of dollars, we believe in your vision, where
Right.
we sit in a traditional environment of agency, and what we've done is we've changed the model 10, 15, 20%, right? So we've kind of found a little bit of negative space and playing in that lane.
Right.
And we have grown through differentiation and doing things differently, John, and having a different attitude. And we do tend to find that a lot of that feedback is, what would you have done 10 years ago? And by that same notion, I don't actually tend to read a lot, right? Because I tend to feel that is, you're looking at historical ways of being successful.
Yeah.
And in this new economy, the actual ways of being successful comes from that agility and ability to see the world a little bit differently. And some of that more abductive thinking rather than pure deductive thinking.
Yeah. No, I agree. And it's interesting you say that about writing. I wrote a book early, and I had been a consultant for over 25 years, switched to coaching, which is really very different. Now that I'm 6 years into it, I can say that with all short, although I had been sort of warned. But one of the things that made me stop, because writing a book is very difficult, it made me pause for a moment, was that, many people said, look, small business owners, and by that I mean sort of under $500 million in revenue, don't read a lot of books because they just don't have time. And quite honestly, they need to learn they need to read things shorter and more to the point, because they just don't have the time to pour through a whole book. So it's interesting you say that. And that said, then tell us a little bit about the environment in New Zealand, because of course in America, everybody seems to want to go after. I mean, it's rare that I hear somebody says, I'm absolutely going to bootstrap. And if they say that, they often 2 years later, you find they are taking on investors. What's unique about New Zealand, do you think? Or where are the differences, since you actually lived and worked here? In fact, in Brooklyn, not far from where I live, you were for a few years.
So I had an interesting worldview of where some of the listeners might tell I've got a bizarre combination of a Southeast London and New Zealand accent. That's kind of my upbringing. And I worked through investment banking through Asia and the UK and the US. So I'd had a rare exposure that your normal New Zealander Kiwi wouldn't get. Right?
Yeah, I don't hear the Brooklyn though. I don't hear your Brooklyn accent.
No, I wasn't there long enough. I wasn't there long enough at all, John. What I would say is really interesting about New Zealand is that we are an incredibly small country. So 5,000 people. Okay, 5 million.
Yeah, that's really small.
5 million people, incredibly entrepreneurial as a country. Really plays, the best word I can say from a global perspective is that New Zealand plays the underdog incredibly well. Okay. So continually overperforming on the size of the country, the size of the economy, the number of human beings and the assets that we have, we overperform on a global stage. We are the smallest developed economy in terms of a first world nation, and a full democratic environment. Even if you look at the way that politics operates within New Zealand, we have the ability to adjust law very quickly. As soon as we had our first ever terrorist event here, gun laws were changed within weeks, months. Okay, and it was literally everybody galvanizes together. There's no division in the country, and it's
and that's because you're small. I mean, I think what we're learning is democracy at some point, the pure sense of democracy becomes more and more difficult the larger a country gets, or it's more under threat. So being 5 million people definitely makes a lot of those things go faster and work better than like what we're going through right now.
Yeah, and look, there's certainly times when I have conversations with my peers here and we look at the US democratic system and say, geez, wouldn't it be easier if there was only two real choices, right? Now we have two major parties here, but we'll then have another half a dozen minor parties. And our government is made up of a combination of a major and multiple minors through there. So it means that we get that consistent diversity of thought that is pushed into our thinking.
Right.
Now, you can see that underdog spirit is driven through just people like our All Blacks, the national rugby team, world champions. Well, we lost it last time. And you'll see it through some incredible tech businesses like Zero, the accounting system, Rocket Lab,
Mhm.
fashion brands like Allbirds, Rod and Gun, right? So there are
Mhm.
some incredible brands from a country which is probably smaller than most states of the US.
Yeah,
And
I would say at least half of them.
yeah,
Yeah.
and we just have a system here which really supports entrepreneurs. One
Mhm.
of the biggest gains here that attracts a lot of international attention is that we're probably the only first world country that has no capital gains tax. So there is a
Ah,
real emphasis towards why would you start your own business and be entrepreneurial is because
uh-huh.
there is a direct tax benefit to be doing that.
Wow.
Um, that is why young Peter Thiel became a New Zealander, was to well, I better be careful what I say here, John.
We try to stay away from politics, but
Yeah, exactly. But look, there is a very unique environment here where we are isolated as an island. We are developed. We are multicultural. We are stable. It's an incredibly beautiful country as well. Heavily reliant on what's happening in the rest of the world, though. You know,
yeah.
China and the US, biggest export markets.
Mhm.
The country itself actually relies on tourism as one of our biggest
Makes
facets.
sense. It's a beautiful country. My
Yeah.
parents went several times and they loved it.
So that really hurt us through COVID. That really affected the economy here. But there is a direct drive towards growing digital biased businesses. And I actually think that underdog spirit plays really well into our culture and into that
Mhm.
bootstrapping of where you turn around and say, do you know what? I'm going to take on the man. Maybe we can be the man. Maybe we
Mhm.
don't need somebody else's influence in this. Maybe
Yeah.
we're better on our own.
Okay,
And
can I stop you there? I just want to
yeah,
take a little break and put my information up if you want to get in touch with me. Here's my email address, johnffirth@gmail.com, my telephone number, and my website, which is actually going through a revision. I'm hoping I can keep that domain. Um, anyways, so Todd, you're actually bringing up some very interesting points, which is the underdog spirit of New Zealand. But you're going global, and we've talked quite a bit about that. Now, that also requires investment, sometimes large amounts of investment, plus a risk of getting it wrong, which I think is probably, well, it's definitely more the case when you're going to other countries that you're going to get something wrong that can cost you money. How is that affecting the culture, for one, but also the desire to potentially bring in extra money? And connected with that is my question about, have you ever come close to having to do a cash call or a capital call from quote unquote your investors who are also your employees?
yeah. So excuse me. Let me answer those in reverse for you. Certainly through our earlier years, we're now around about 500 staff. I can certainly recall many times when we were 10, 12 to maybe 20, 30 staff. There were
Mhm.
times where the shareholders chose not to take a salary for maybe 3 to 6 months.
Mhm.
So we were investing our time rather than putting that cash back in. Um,
Okay.
and that was a group decision of, hey, we thought we were going to close this project. It looks like it's delayed, or the cash flow is not quite there.
Mhm.
What do you
Right.
want to do, team?
Mhm.
Um, we would certainly regularly offset our bonuses and just say, no, forget that. That's not relevant. And
Mhm.
essentially, we operated within our means, right? We operated within our means because there was a shared long-term vision.
Mhm.
And moving into those international markets, the way that we support those. So through COVID, we've launched in the US and Germany and some additional satellite offices in other countries. We use the concept of a federated business model. So
Okay.
where we have 13 offices now, each one of those runs an independent P&L, and these roll up into a group level. So we
Mhm.
have multiple tiers of motivations for those people running those offices. So if
Mhm.
you come in
Okay.
as the managing director of a new office and let's just say Paris, then you
Mhm.
would be motivated by the P&L of that Paris office, by the
Mhm.
targets that they're in as a medium term, and then a
Mhm.
long-term view of the shareholding in that senior business.
Okay.
We would
Does that
then
mean,
view,
by the way, does that mean that they have any investment requirements? It doesn't act like a franchise. It's
not as
not
a
a franchise.
franchise, very much as a federated model. And
Mhm.
again, typically they're coming in from a X $100,000 salary at their big current corporate job, and they're getting half of X to come in. And typically we're looking for those individuals that are making that migration into, I need to be an entrepreneur. I've done my stint in these environments. I now understand what I can achieve through there. We tend to see around about a 24 to 36 month life cycle, 12 months losing money. And that money will be supported by group. So we are expecting that where we start with a top heavy team and we start with quality in market, not just putting sales guys on the ground, but actually building local federated capability, supported by group revenues. So what's really important is the business that's 4 years old in New Zealand, Australia, Singapore, that those guys remain profitable because they're then providing the cash flow for Paris, London, Berlin, Cairo, right? And yeah, so that's how we basically managed to kind of Lego brick on top of each other, right? Literally, each office supports the other, and then as that stone gathers more moss, it then gives us the opportunity to do more and more and more in market. What we are now seeing as a business, though, is that the cost of entry into new markets, the cost actually isn't necessarily the capital. The cost is actually the speed, John, right? So it's the issue of becoming relevant in market can take us 18 months to 2 years just to get brand and language and relevance. And, you know, there's different cultural needs of when we enter the German market, you know, that required a lot of diligence around, have you got your certifications? Are you qualified? What's your portfolio? When we entered into the American market, it was more chutzpah and attitude and, you know, prowess in what you're doing. So it requires some different subtleties that we've had to learn along the way. And obviously you make mistakes of, you're kind of pinning your hopes very much on your lead entrepreneur who's running that office as well, right? So what we're finding now is that doing small acquisition pieces actually helps us jump those hurdles in terms of the cultural gaps and the relevancy and speed to market and a bit of a portfolio. And the way we've done.
By the way, a quick question though: do you use an advisor to first of all find those acquisitions? Do you have any external help to defining them, integrating, and so forth?
No, we've done it all independently. In fact, at the beginning of COVID, we did a very interesting little video. I should find the link for you, where we literally got all of the shareholders to record a call to arms that we weren't going to slow down. We were going to double down. And it was this kind of a "we want you" kind of video that we
Uncle Sam
on LinkedIn. And off the back of that, we actually found a founder for our German office, right, who reached out. We probably had half a dozen really great entrepreneurs reach out to us, and we wish we could have done them all, but we picked one and attacked from there.
Because they saw this video. Because they saw the video?
Absolutely, yeah. And they recognized our brand. And in the little niche that we work within, we'd kind of done enough work out there that people knew that we existed if you were in that space. The other just interesting part for your viewers through there is, well, if you're doing acquisitions, Todd, doesn't that take a lot of cash? We've never paid.
My next question. Right.
Yeah. We've never paid for an acquisition, John. What we've always done is bring people in with a equity swap merger. So it's been a case of saying, your little mini asset, our fast growth asset, put this into our rocket ship and we can increase the value of that. We bring more capabilities, more assets. We can make other entrepreneurs more successful through our model because they can literally say, I currently have 2 services. If I join Overdose, I now have 6 services. I never have to worry about finding a developer again. I can then assist American brand entering into the French Paris market, right?
And so you really, that's when the federated model becomes a platform. It really is, or in American lingo, it's a platform you provide.
I think that's a really interesting word. I've never considered it as that. But I would say, yes, it is a platform, but there's a level of cultural alignment there and a level of fiscal support that can come from the other offices that does make it a unified platform where people have got a long-term stake. So it's a bit like having a franchise, but you own a slice of the brand as well.
Yeah, it actually reminds me a little bit of what I'm just learning now with real estate brokers. I have a client who just took on joined an alliance, is now allying with Better Homes and Gardens. The brand is incredibly strong. It's nationwide. And they actually gave him about $250,000 for the alliance. So he actually got money from Alliance in order to do training and things to bring things up to the Better Homes and Gardens standard. So yeah, that's an example. I think that comes closest to the one you're talking about is what I heard there, where they actually help you with money. So that you're aligned with the brand. So it's even more than a platform, just like you said, there's the cultural and the brand attributes that need to be aligned, and that costs some money. But in that case, Better Homes and Gardens paid it.
Very interesting. Very interesting. Yeah, I concur with you on that.
Yeah. So going forward, what are some of your plans and how do you think you're going to finance them? Also bootstrapping?
Yeah, we will continue to bootstrap. There's certainly, the odd month and the odd quarter where you wished you weren't bootstrapping your way through, but then we have resisted acquisition multiple times through the history of the business.
One of my questions. Yep.
We continue to grow. The value of the business increases through there. So the net worth of our shareholders, it's always a positive journey. I think we're at a level where it feels like we're kind of entering our teenage years now, John. We're 7 years old as a business now. We've got a team size, as I said, of around about 500. There's certainly a lot of the conversation around the shareholders and the founders is it's time to do a little bit of growing up. There's a little bit of structure that needs to be put in there. One of the things, again, which I think is a value of bootstrapping is that you choose your level of maturity that you want to achieve through there. So there are some deliberate decisions where we decide not to grow up, where we say, look, we need to stay a bit scrappy,
Okay, that would be just so it's more mindset and culture, or is there actually little investments you're not going to make? The first one I think about when you're growing up is infrastructure. At some point, you have to bite the bullet and put in a proper ERP system, for lack of a better word, with software and so forth. So you're talking about mindset and culture, I think.
I am, yes. So we as a business don't need to make any major technological investments because we pretty much run off cloud systems, right?
Okay.
So, we literally live in a SaaS monthly fee environment in what we do there. But certainly what I see within the business is, and we talk about it a lot internally, is this concept of entropy, where the greater the business becomes, the more likely you are to slow down, lose that energy, and kind of become what you set out to break. And I see that through a tendency in all of the growing up, whether that's putting in better COOs, CFOs, finance structures, your accounting model.
Right.
Now, we operated for 3 or 4 years without a CFO, right? And it's like, okay.
Most young companies at some point do, have to.
We need, and then someone comes in and points out that you've got, $2 million of unpaid invoices.
Oh my God, that happens all the time. I can't tell you how many of my clients who are a little bit smaller than you and are growing up discover either that their financial system told them they were making more money than they actually were, and they spent it not knowing, on occasionally not so smart things.
I've made that mistake.
Yeah. And then the other one is discovering that the receivables are much higher than you thought they were, or the payables even sometimes. Most of these receivables, that's just cash waiting to be brought in. And sometimes it's real scrambling that has to go around to even find all the receipts, understand what that number is and why hasn't been paid. Have they been sent out and not paid? Have they not been sent out and so forth?
And that's where you get into that over trading environment, right? And so I think that, we have a business have had to learn the difference between your balance sheet and your cash forecast, and make sure that we've got the ability to do that. We obviously have a different level of responsibility as owners now, right? It's not 10 people's lives. This is 500 people's lives that you're playing with. So there's certainly a lot more judiciousness that goes into that decision-making now.
Now, that is the growing up part, I think. That's the maturing part, where you realize that you got a lot of responsibility for 500 people.
Yeah, and it's also the sleeping at night and then taking your team through those mental health challenges that go with that, of saying, hey, we did this because it was going to be a cool, fun story to do, and now we're responsible for all these people's lives. That puts a different level of incumbent pressure on people.
Well, for some people, it's getting married is a major step. And then the next one is having children. You've already got like all your children, and there happen to be 500 of them, and the world changes a lot.
And now they all want to go to college.
Yeah. And they all want to go to college. That's right. You're in your teenage years, the way you said. Yeah.
So I think for us, the next couple of years, a heavy US focus. So with travel just starting to lift, we're getting out and spending a lot more time with the team there. As I said, our headquarters are in Seattle. We've got teams on the ground now in Manhattan and LA. So we hope to continue to see that growth happen through there. A lot more focus on the disciplines of the businesses. But we will be investing continually into the US and then Europe as our secondary model through there. We do see that the US is I'm going to say easier, but that's not meant to offend. It's easier just due to the single currency.
Oh, I don't think anybody would be offended by you saying that. I think a lot of people would agree and then say, well, yeah, and that's what makes us great.
But it also means that there is a lot more people attracted to that same honeypot, right? Where we've actually been historically quite successful is that playing in negative spaces of how do you pick out evolving markets where nobody else is throwing their attention towards?
We call that a niche strategy, yeah.
There we go, yeah. So I'm very bullish on South America as much as North America.
I think that's right.
For us in the digital commerce space, the barriers and border to entry are very low. The economies there and the adoption of digital products and mobile technologies is hyper aggressive. And they have
There's a lot of leapfrogging going on too, I think.
Oh, huge leapfrogging, right? Where they've benefited from us going through 14 versions of an iPhone, they're jumping straight to the latest version.
Exactly.
Right?
Yeah. And then they'll stay there for 10 or 20 years and then do another leapfrog, probably.
I think you're absolutely correct. And we're actually seeing the same in the North African markets as well. Right. So as soon as you go to that North African and Middle East markets, they have some of the highest adoption of smartphone technology because they never had the Nokia 3310, right? They didn't have that little brick that we couldn't break.
Right. And they have now, they have a lot of infrastructure. Evidently, the Chinese are providing, and Indians are providing a lot of the infrastructure for that. I see we're coming up on our time. So any final words of wisdom for an entrepreneur who's either gotten started or is contemplating or needs to really face the fact that they might need to bring on an investor because of cash flow needs?
Yeah, my recommendation would be in that personal alignment, right? And making sure that there is a true alignment of vision for where you're pushing your business that goes above and beyond what that cash injection is. And that there is a very clear expectation of what is the anticipated return on that cash injection. So is this I want a board advisory seat and I just want to see once a quarter, but I'm not expecting to see this cash back for 10 years? Or is there hey, within 18 months, I expect to see a 30% return on my money? And that differs from human to human, industry to industry, right? I would also go and look at the portfolio of investments that individual or firm is bringing into your business and make sure there is a level of correlation and alignment that they are walking the walk, not just talking the talk. We have found that out the hard way where we were just about to take money. Situation happened. We present, this is our strategy. It's like, no, we don't want you to do that strategy. And it's like, hey, look, you're coming in for 10%, but you're acting like you own the bloody thing, right? So let's make this clear. You're there as a advisor and a secondary investor, but I'm still the founder and entrepreneur and running the direction of this business. And if you have
a majority or minority stake?
So I actually started the business with myself and Ryan, and we were 80-20. I've diluted myself down now to about 35%. However, as a core group of 4 or 5 of us, as a founding group, we still retain 65% of the business. That said, we have never taken anything to a vote, right? It's literally been a unilateral view on where we're driving the business forward. So there will come a day. There will come a day, John. But, touch wood, we still drive things as a united team rather than a divided board or group of shareholders.
Well, given your track record to date, I'm sure whatever hurdles or whatever hurdles come your way, you'll be able to jump over them. Thank you very much. It was interesting. I think we had talked about doing another LinkedIn Live around this whole question of internationalization and this whole concept of think global, act local. And then, of course, there's the comment you made. Well, being from New Zealand gives us both the benefit of not having tons of associations, pre-formulated beliefs about a brand in terms of the country, but then also it's New Zealand. It's not America, it's not Germany, it's not Russia, where there's clearly some power there that we need to harness. How do you actually take something like a New Zealand company? Because quite often, honestly, I don't know of any other New Zealand companies that are active in the US except for yours now. So hopefully we'll be able to do that sometime in the next couple of weeks. But again, thank you, Todd. Very, very interesting.
Cheers, John.